Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about Coca-Cola. Is Coca-Cola stock a buy? This has been requested by quite a few of you guys over the past month, so I thought I would dive deep and check out Coca-Cola. Is it a buy? Would I be buying Coca-Cola stock? Before I get into this video, if you guys could please leave me in the comments section what stock you would like to see broken down on next week's video. I would love to see that from you guys, so I may do it, I may not, we'll see. But please leave me a comment, I would love to see it. So first off, we need to act like we have no clue what Coca-Cola is, right? We don't know. So what is Coca-Cola? Coca-Cola Company is the world's largest beverage company. We own our license and market in more than 500 non-alcoholic beverage brands, primarily sparkling beverages, but also a variety of still beverages such as waters, enhanced waters, juices, juice drinks, ready-to-drink teas and coffees and energy drinks, sports drinks. We own and market 4 of the world's top 5 non-alcoholic sparkling beverage brands: Coca-Cola, Diet Coke, Fanta, and Sprite. That's 4 of the top 5. That's insane. So finished beverage products bearing our trademarks, sold in the United States since 1886 and now sold in more than 200 countries. Basically, Coca-Cola is a soda company, but they also are diversified. They're also into juices, they're into teas, they're into water. I'll explain to you guys. We're actually on the next slide. We're going to look at some of these brands that Coca-Cola owns that you guys might actually have no clue that they even own. I've looked into Coca-Cola many years ago as an investment, so I actually found out, and I was educated at that time, on how many brands Coca-Cola owns. It is amazing how many big companies they own. So let's go ahead and get into this, guys. So obviously they own Coca-Cola, Diet Coke, Coke Zero, Fanta, Sprite, all those. You guys probably know that. But look at some of these other brands they own. Minute Maid. Minute Maid Juice, are you kidding me? They own that. Powerade. They own Powerade. Dasani, they own Dasani water. They own the Simply brand. I love Simply apple juice. It's my favorite apple juice in the whole world. They own that brand. Vitamin water, Gold Peak tea, Fuse tea. They own the Smart Water brand, which is also operated by the Vitamin Water Company. So they own huge brands here, guys. Not just in the Coca-Cola space, not just in the soda space, but in the juice space, in the water space, in the tea space. Some of the biggest brands you see out there, they own those, guys. So they're very diversified as far as different drinks. They're obviously a drink company, but they got a lot of different brands. And if you're probably drinking something, there's a good chance it's something Coke owns. Let's be honest. So let's go ahead and get into this next slide. So now we're in the risk factors. This is in the 10K in the annual report section on the investor relations page of Coca-Cola. Number 1 risk factor, obesity concerns may reduce demand for some of our products. This risk factor, I actually don't even care about. I'll be completely honest with you guys. I don't see this having much of an effect on Coca-Cola whatsoever. I really don't. Maybe very minuscule, maybe very small. But guys, we've known about obesity. We've known that Coke products aren't the best things for you. And what has happened? Not a whole lot. We've known about this for decades, and Coke's business hasn't been affected super negatively by this. And we've known about it for decades, guys. So this to me is not their biggest risk factor, although it's labeled as their biggest risk factor in the risk factor section. The number 2 one actually is, in my opinion, which is water scarcity and poor quality of water could negatively impact the Coca-Cola system's cost and capacity. This might not seem as huge of a deal if you live in the United States or if you live in a well-developed European country or one of those places. But in a lot of the markets that Coca-Cola is very dependent on growth for, which is some of the Latin American markets, some in Brazil, some in some of the Asian countries, some of the poorer markets, water is very hard to come by in some of those areas. So if say push comes to shove, and does Coke get the water? You know, do the Coca-Cola factories, do those get the water to make the Coke products, or do the people get just water in general? If it comes down to that, if there's only enough water to go around, who's going to get it? So that's a big thing, guys. That's a big risk factor, in my opinion, in a lot of the developing countries. I actually just got back from a place that's pretty well developed. I got back from Los Angeles a few days ago. I was out there doing some jobs for one of my customers, and I was in Beverly Hills. This is in Bel Air. It's two of the most exclusive, the most expensive neighborhoods in the entire world. Not just in America, in the entire world, guys. And there's medians, all that separate the roads, right? There are medians, and usually those are filled with lush grass. It's beautiful grass, perfectly maintained and everything. It was all completely dead. It was all just dirt, pure dirt. It looked like I was in a third world country and I was next to $30, $40 million homes, guys. And why? Because LA's in a huge drought right now, so they don't even have enough water to spare on things like watering the medians of the grass and the vegetation and things like that, guys. So when you kind of open up your eyes and you see what's going on with that, I think this is Coca-Cola's biggest risk factor. Because what if the city or the state they operate in says, you know what, we don't have enough water to spare to make your little Coca-Cola beverages because those aren't as important as just pure drinking water. So we need to divert all drinking water just to be drinking water right now. And you cannot make your Coca-Cola products. That's huge, guys. That's a huge risk factor. And these type of things, these droughts and those kinds of things are just getting worse, they seem to be. So I think this is their biggest risk factor. Let's move on. We're still in the risk factor section here. Now, this is actually not a risk factor so much in my opinion. It says if we fail to realize a significant portion of our anticipated benefits of our strategic relationship with Monster, our financial and performance could be adversely affected. In August 2014, we entered into a definitive agreement with Monster for a long-term strategic relationship in global energy drink category, and upon the closure of the transactions contemplated by the agreements in June 2015, we purchased a newly issued shares representing approximately 17% of Monster's issued and outstanding shares. So Coke made a huge investment in Monster. They believe Monster brand is the winner in the energy drink category. They probably believe Red Bull is as well, but at the same time, Red Bull probably wasn't that interested in Coke because they already have their own distribution and whatnot. So the next best thing is Monster. Now, we're going to actually look at how much money Coca-Cola has made on Monster stock just since they made that investment in 2014, 2015, guys. It's ridiculous. We're going to look at that a little bit later. But this is a huge plus potentially for Coca-Cola because Coca-Cola has a big interest in Monster now. And Monster's sales are just growing and growing. Monster sales have been growing for the past decade, and they're just getting bigger and bigger. The energy drink category has been on fire the last few years, specifically the last 5 to 10 years. So huge growth with Monster. Can they realize all that growth there? We shall see as time goes on. So now let's go ahead and look at how much money they've already made on that Monster beverage investment. And this is actually as of December 31st, 2015. So the investment cost them a little over $3 billion. That's the carrying value for the Monster. It's worth over $5 billion as of December 31st, 2015. So they made a $2 billion profit, guys. A $2 billion profit in like a year. Are you flipping my flapjacks? $2 billion in like a year. They're like the next Warren Buffett over here, Coca-Cola. Holy smokes. And you look at that list, guys, there's a lot of other companies they've invested in and whatnot that they've made huge sums of money on. Huge sums of money. So I look at them and I'm like, you know, whatever they're doing as far as investing, they're doing a pretty damn good job. I will tell you that much. Pretty dang impressive, guys. So now let's go on to look at their income statement here. We got to dig into these financials, see if Coke's a winner. So 2013, they did $46.8 billion in revenue. Look at now, 2015. Last year, they only did a little over $44 billion in revenue, guys. Let's go down to net income. They did over $8.5 billion in net income in 2013. They only did $7.3 billion in net income in 2015. I look at this balance sheet, guys, and it worries me. It really does worry me. I see revenue going down, and I see net income going down significantly. To drop well over $1 billion in net income in a matter of 2 years, that's a huge red flag. That's a huge bad sign, especially for a company like Coke's size. You know, I wouldn't expect a drink maker to really ever experience declines. So the fact that they're going through this declining business model, it definitely makes me worry as an investor. But we got to look at a lot of other things because a lot more things to judge it than just the income statement. Let's go ahead and look at this balance sheet. So we're just focused on 2015 here. They have $7.3 billion in cash. They have $12.5 billion in short-term investments. They have $15.7 billion in long-term investments. So they're very nice numbers there. They have over almost $16 billion in short and slash current long-term debt, and they have over $28 billion in long-term debt. This balance sheet I would rate as an average balance sheet for a big company like them. I'd rate it an average balance sheet. It's not good, certainly not great. It's not bad and it's not awful. It's just average. Let's just call it what it is. It's an average balance sheet Coca-Cola has here, guys. Nothing more and nothing less. Now, this is their latest quarter. They just reported about 3-4 weeks ago, guys. These numbers are even more worrisome. Net operating revenues down 7% year over year. 7% year over year. Cost of goods sold was down 10% year over year. So that's actually a good sign that at least cost of goods sold went down more than net operating revenues. Gross profit went down 5%. Operating income went down 5%. Income before income taxes went down 17%. Consolidated net income went down 28%. Net income attributable to the shareholders of Coca-Cola went down 28%, guys. Another huge red flag. So not only do we see they have a declining business model over the last few years, so over kind of the long term, but they have an even worse one in this past quarter, guys. So I look at this and I'm like, holy smokes, Coca-Cola, what is going on? What is going on with your business that you're having this much trouble? Because there's a lot of damn trouble, guys. There's no sugarcoating these numbers. These numbers are real and these numbers are honest, and neither one's good. From the 3-year income statement to the last quarter they just reported, it's really crappy. I'll be honest. There's no other way to sugarcoat it. It's really crappy numbers. Now, let's see if this is a good deal here. So the market cap's about $180 billion. That's about what Coke's, at. Their 52-week range is really consistent. Look at that, only $40.63 to $47.13. So the stock hardly moves at all. It's toward the 52-week low, which is, because right now it's at $41.53. PE of over 25 currently. They do have a nice dividend of over 3%, so I do like that dividend. That gives a big plus for the dividend. Forward PE of 21, which, gosh, I don't know how they're figuring they're going to make more money next year than they made in this past year, because past year is kind of struggling a bit. So guys, what's the verdict for me on Coca-Cola? It's absolutely not a buy for me personally. I will not be buying Coca-Cola. I'm a long-term investor. I'm a value investor for the long term. Or if I'm not value investing, then I'm growth investing. I'm investing in companies that I think are going to grow significantly in the future. This doesn't meet either one of those criterias. It's sure as hell not a good value when you're trading at a current PE of 25, 26, and you got a declining business model, and you only have an average balance sheet. So this doesn't meet value, and it sure as hell doesn't meet growth because they're in a declining business model. So it's not value for me. It's not growth for me. So Coca-Cola is a no play for me. I would not, wouldn't even be in my top 100 stocks to buy probably. Not even close to being a buy, Coke. You did not meet the criterias even close, I'll be honest with you guys. I hope you enjoyed this. Let me know in the comments section, what do you guys think about Coke? Would you buy it? Would you buy it for the long term? Would you buy it for the short term? I would love to just hear your guys' opinion on this. Also, I would love to hear you guys' opinion on what stock you would like to see me break down in next week's video. If you're watching this today and you have not subscribed yet, you may want to. I talk a ton about personal finance in the channel. I talk about entrepreneurship. I'm an entrepreneur. I talk about the stock market so much on this channel every single week. Thank you for watching, guys, and have a great day.